Let's start with the fact that it is Monday. There's a lot of deals, but it also is the beginning of a holiday-shortened week. So how much faith can we take that these gains will hold, given that maybe a lot of people are absent?
Yeah, and add to the list, it's the end of the quarter as well. So we've talked about choppiness. Everyone's experienced that for the last several months. It continues. The S&P was down 2.5% last week. Obviously, a big bounce today. In volatility terms, something I continue to watch is just where the floor for spot VIX is. That 13.5 level is elevated relative to the last couple of years. We're not near that right now. If we come through that over the next few weeks, that'll be sort of an inflection in this volatility cycle that we've talked about here for a while. Same with VVIX, which measures the volatility of the VIX. So bottom line, as long as these volatility measures remain elevated, you have to expect this choppiness to continue.
All right, so the choppiness continues, and as we look at the first quarter overall, U.S. markets are pretty much finishing with little change. I mean, if the Dow's lucky, we'll hold on to these gains of 0.9%. But
right, exactly.
A lot of movement, and we kind of end up nowhere in contrast to what we see in Europe.
Exactly, and you'll start earnings next week in earnest. So although we've been sort of without catalyst for the last couple weeks, ex the Fed, we'll really pick up with news flow, also the employment report later this week. So a bit of a lull that we've had of late. That'll turn around, obviously, with earnings.
All right, that'll turn around, obviously, with earnings. Let's get to your trade, which is on Twitter. The stock has surged more than 35% so far this year. It is down today. What's your strategy?
So what we want to do is we want to go all the way out to June, and we just want to buy call spreads. We have a group at our firm called the Intelligence Community. They go out, they survey users, in the case of Twitter, more than 2,000. And the real issue with Twitter has been user engagement and growth. Grew just 4 million users last quarter on top of a base of about 288,000. And what we got back from this survey is that some of their new features are really beginning to work. Specifically, they've got this instant timeline. It was rolled out less than 2 months ago, but when you join Twitter now, it looks at your contacts, sort of flushes out where your interests may lie, and begins to show you tweets from that universe, as opposed to just showing you tweets from who you sign up for. That should help user engagement. Our analyst, Rob Sanderson, is encouraged by these developments. They won't report earnings until the end of April, but we want to add long exposure here, especially into this weakness today.
Okay, so tell us your trade specifically.
Okay, we want to go out to June. Very straightforward. We want to buy a 52.5 strike call. We want to buy sell a 65 strike call. It's a call spread. You pay about $2.30 for it, and you create just about a 4.5 to 1 payoff with Twitter above 65.5 at expiration. It looks way up there, but again, we're very bulled up. We think it has a lot of headroom here.